The real estate market is not going to collapse. Stick around for this video. I'm going to talk about the real estate market today, which is one of my passions, which you guys know. I'm going to explain the reasons why I just don't see a collapse coming this time. If I use some clickbait and some of you are watching, I apologize for that, but it gets people to look, and maybe some of you will see some good reasons as to why I don't see it coming. Hello, my YouTube friends. My name is Adam Kahn, and I'm the Rational Investor. I hope you're all doing well. Today is Wednesday, March 6th. Beautiful day here in Las Vegas. Boy, I could have worn shorts and a t-shirt, which is super cool. I love that in February and March, the weather's so beautiful that, it's not like when I was on the East Coast growing up or even when I lived in Chicago and you get those rough winters. Anyway, before I forget, do me a favor if you haven't already, hit that subscribe button, smash the like button, make some comments, tell me what you think about the economy. As you guys know, that affects the YouTube algorithm and helps other people find the channel as well. I really appreciate that support. So today I was watching one of my favorite YouTubers, and the funny thing is he and I have a different perspective as to what we think is going on in the real estate market, but I really do enjoy his content, which is a guy, Travis, I never can remember last names, but he does real estate mindset, and he had Peter Schiff on there today, um, and Peter was talking about some of the things that I'd mentioned in some other videos, but to be fair, he's also a little extreme in what he sees in the inflation and the economy overall. But in terms of the housing market, one of the big disconnects of what's going on now versus what went on in 2006, 7, 8, 9 is the loans that were being used at the time. There's also some other things going on, but the loans made a big difference as to why we had a collapse back then. So back in, geez, I want to say it was like 2006. I was getting into maybe becoming a mortgage officer back then. I've always loved real estate. I know I'm good in finance. It's always made sense, so I thought about it. And we went to these classes where they were talking about this product called an option arm. An option arm allows a buyer to have four different options in terms of making a payment when they get their statement. They can do a traditional payment that includes the principal, the interest, and fully amortized is the way it's referred to. They could do what's called an interest-only payment, and then they could even do a payment that was negatively amortized, as well as doing one that was additional payment. Well, the problem with these loans is when people got their statement, it would have four different options with different amounts of a monthly payment they could make. And my guess is most people were making what the minimum payment was, which was the negatively amortized ones. For those of you who don't know what that means you're actually adding on to your principal balance and paying less than just the interest. The reason for these loans, it's kind of meant for investors more than anybody else. If you're buying a home and flipping it, you're not so concerned about anything other than keeping your payments as low as possible for the time frame that you're doing the updates and everything else in order to get that property back on the market and sell it. At the same time, it may not be the best option if you're selling it to the regular buyer of a house. And the loans kind of got abused and they were really sold to everybody. I remember we had this big meeting for the whole office, and there was a girl there. They stood her up in front of everybody and went on and on about how great she did because she went on this family retreat. And during the family retreat, she convinced her mom, her aunt, and one other person at the event to do refinances and get out of their traditional mortgages into these new loans to give them the lower payment. The problem with that, and I used to argue with the guy who was teaching the class, and I remember the person next to me like kicking me under the table, telling me to shut up, to just learn. And the funny thing is, I ended up getting out of the business because I was so turned off by all of it, and then got in years later. And I know some of you know that's what I do as well right now. But the problem is, he would sit there and sell it as, there's brother A and brother B, and if you put in the lower payment and use that savings to invest in other things and just make 10% on those investments, how much better you end up. Well, the problem is, for one, people don't usually take the money they've saved and invest it in other vehicles. They tend to spend it, whether it's a car or this or that or going to dinner or whatever it is. They tend not to really save that additional savings. On top of that, I started arguing, where are you going to guarantee 10% the return the way you're talking about it as well? And he's like, well, the stock market or real estate, there's all sorts of things where you make 10%. Okay, I understand that that is possible, but there is no guarantee, especially at that type of return. And I couldn't believe that's how he teaches people learning about this stuff. And if we go back to that girl who sold it to her mom, her aunt, and the one other lady at the family event, and the way the company was just putting her out there, showing it as like how great she did, and I'm sitting there kind of nauseous, thinking, "Oh my God, you're putting these people in such jeopardy that they're not going to understand." What happens is those original payments eventually season and go into a real payment. Now, oftentimes it was, 3, 4, or 5 years before it went into a full payment, but those teaser rates expire and you have to make the full payment at that point. And I don't think a lot of people who were getting those loans really understood that. So let's say you own a property and you have this loan, you get your statement every month like you always have. It's got these four different options, and houses prices have begun to correct a little, and you're not too concerned. And then one day you open up your mortgage statement and the payment has gone and there's no longer those four options. And I'm going to use a real example because this happened to my sister. And your payments are no longer giving you an option of 800, $1,100, 1,500, or 2,800, and the only thing you're left with is about a $2,500 a month payment. And you had no idea that one day this loan would expire from the teaser rate and just give you a full normal mortgage payment. Well, now you have a upside down position in the house, meaning you owe more than what you've actually borrowed. And that payment where you used to only be able to make that minimum payment now forces you to make a full payment. So your payment option has gone up dramatically. Well, that changes the game versus you being pinned into low payments. You have equity in a house, and maybe it corrects, maybe it doesn't. Right now, back in COVID, I had the opposite reaction. I refinanced as much as I could when they lowered rates. And not only that, I called my clients begging them to do the same because I really saw it as a once in a lifetime opportunity. Rates were already low. We had COVID, the government got scared, which is totally reasonable. They had a knee jerk reaction and lowered interest rates to try to keep the economy stimulated and give people an opportunity to lower their payments in an effort to help them get through a rough period. I didn't see that as being something that would last forever. Unfortunately, a lot of clients see me as a salesperson. They thought it was just a typical loan officer making their sales. But I did it for myself as well and just saw this as a really good opportunity to put people in a low interest rate. And I didn't see it as something that would be around forever. Now, fast forward to today, and you have all of the people who did that, along with even the ones who didn't, that have rates in the fours. And what is their incentive to sell their property and move on? This is what Peter Schiff talked about in the video a bit with Real Estate Mindset and Travis. I think it's a really good point that I get it. People think things are expensive. And I see all the comments in the comment areas about, oh, it's unaffordable. But keep in mind, unaffordable to who? I can tell you things are just fine. There are plenty of people who do qualify. There are plenty of people still moving forward. And while it's gotten more expensive, and to some it has either priced them out or put them in a position that they can't afford what they used to, and now they're getting stubborn because I used to be able to afford this and now I can only afford this. Well, I think that's more anger than reality, and getting angry at the markets doesn't do anybody any good. That doesn't mean it's going to crash because it has to. I don't even understand why people think it has to. It really doesn't have to. You have people in really good positions that have no reason to list their homes for sale. So you're not going to see those properties come back to the market. Then you add to it that there's plenty of people who do qualify, there's limited inventory, and people want to own. So if you're in the position and you're able to, and you can comfortably afford a house, I don't see things getting more affordable anytime soon. In fact, I really feel like no matter what interest rates do, unless they shoot up to 10 or 11%, the prices are going to continue to drift higher simply because there is a lack of inventory in desirable places. I like to invest in real estate as well. The math isn't really making sense in a lot of places where it used to, but there's still places it does. They're just not where I want to invest because they're too far away from where I live. I looked at Pittsburgh and Cleveland and Cincinnati and I saw good opportunities still. But if you wanted to be in Florida or Las Vegas, and I like to be in Las Vegas because it's where I live and I like having property close to home, well, maybe the numbers don't make sense, but these are really nice places to live that I feel like were undervalued for an awful long time. Now, if you watch the whole video of what went on in real estate mindset, I do think that Mr. Schiff or Peter or however you refer to him probably is a little extreme on his thoughts of inflation. And I really don't see it getting that bad the way that he does. And I don't see this big economic collapse. I see that we've pivoted. And if you look at the bond rates, we were in a period where rates were continuing to go lower over a 30, 35-year period. Well, maybe they drift higher, and the first move was dramatic. But maybe moving forward, it isn't quite as dramatic, and maybe it stays higher for longer. I think the greatest scenario is if the Fed's actually able to cut the short term lending rate for the banks and still be able to sell the long end out of their portfolio, which would uninvert the curve, make things more normal, and it may not cause mortgage rates or 10 years or 30 years to actually go lower in terms of rate because there'll be that pressure of the Fed selling those bonds. I think that's like a total Cinderella, but it could happen type of scenario. Part of the reason I see that as a possibility is if you were going to lock up your money for 10 years or 30 years, don't you think you'd want to get paid 4 or 5% return on that money as a minimum? So I think that it's reasonable that the Fed could actually sell their long end notes at that rate or possibly even higher, and at the same time be able to cut the short term overnight lending to the banks, because if CPI and PPI continue to ease, and even if it stays in the threes, there's no reason to keep the overnight lending in the fives if CPI and PPI are in the threes. And if they actually can drift down to that 2% target that the Fed's hoping for, then there's really no reason for them not to lower the rates. Now, they are in no hurry. I think what they say is the truth. And there is a risk that they hold them high for too long, the same way it took them a little too long to start raising them when they were holding them lower, trying to stimulate the economy. The data takes time to show in the numbers, which is why I think they're slow to react sometimes. The interesting thing that I find about all of it is if the Fed ends up in that position where they can cut the rates and still sell the long end of the curve, what you're going to see is the news talking about how the Fed is cutting rates. And people are going to think that just automatically means lower mortgage rates, which is going to stimulate the housing market, but you may not see mortgages actually go lower. That's kind of the scenario I envision. Now, like always, this is not financial advice. This is not me telling anybody what they should do. You need to make your own financial decisions. This is just my thoughts, and I'm just some guy on YouTube, and it's what I see in the economy. But I also see and think that's what they're hoping to do, and I kind of think that could be how things play out. I see those comments of how awful this is or how awful that is. And I hate to be so hard on people, but the economy is always tough. And it's always tough on the lower end earners. And it is really hard right now because the inflation is real. But keep in mind, a 2% inflation is not deflation. And I've said it 100 times. A price of a home is no different than the price of a carton of eggs. I know it's a big, expensive product, and you look at it and think, yeah, but a home was 200,000 and now it's 350 or whatever the numbers are. Okay, but a carton of eggs went from $1.99 to $3.99, and they didn't have interest rates go up the same way, which is why it doubled, and the housing only went up maybe, you know, 75% from 200 to 350 instead of 200 to 400. The interest rates slowed it down. I think as we see inflation slow, that continues to slow, but the economy feels more normal to me now than it did when we were booming and going crazy. Anyway, again, I hope I explained it well. By all means, ask questions. Tell me why I'm an idiot. I know tons of you disagree. I know you're struggling. I know you see it as unaffordable. I still say that's depending on somebody's position. Um, and give me a thumbs up, like, subscribe, or hell, just tell me I'm a moron. I'm happy to discuss it.